another great episode of the Insights podcast. If you missed the others, we've done 3 so far. Surprisingly, there's so much alpha, so much great content there. We're here with another exciting one, and this is interesting because it's a follow-up. We've spoken to the guys here at Raze and Ferrox before we got rugged, as is the case sometimes in crypto. Luckily, this was just a rug on the stream for the spaces. But before we get into it, I'll go around the room and get a little bit of an intro, then I'll do a recap of what we spoke about last time. So, Brian, to my right here, can I start off with you? Then we'll go to Tim and Terry. Give us a bit of a quick intro.
Yeah, Brian Anderson, CEO and founder of Raze, and we are a full turnkey tokenization platform and engine that enables companies and issuers like Terry here from Ferrox to bring their real-world assets on chain, digitize them first, and then securitize them for trading, liquidity, fundraising, etc. And we're super excited to do this with you guys. Thanks for the time.
Fantastic. And over to you, Tim.
Thank you, Mark. Great to be here. Tim Stoddard, Chief Revenue Officer of Raze. Bring very close to 40 years of traditional finance to the market, to Raze, as well as got into the digital asset side in about 2017. So this is a great way to bring it all together.
Fantastic. And finally, over to you, Terry.
Yeah, Terry Duffy, CEO and Chairman of Ferrox Holdings. Want to thank Redbelly and Raze for all their time and effort for this. And I'm very excited for our interview today. It's transformative.
Transformative is a very good word to hone in on. Our last conversation, you guys were with Jack from Redbelly. We talked about things like the asset originator, what you guys are doing at Ferrox, the tokenization engine, as you mentioned there, the infrastructure that we provide over at Redbelly, and we unpacked how titanium, and yes, real ferro titanium was the focus, is now being tokenized and offered globally as a yield-bearing digital asset. So really interesting stuff. I recommend, if folks are watching this right now, go back to that at the end of this so that you can get the intro. You can do a Quentin Tarantino, reversal of, the timeline there. So we're going to build upon that. But most importantly, I think, and we're going to get to it later in the episode, but we've got some alpha that we're going to drop, guys. So, definitely stay tuned because there's some really exciting stuff that we'll talk about more towards the end, as well as addressing some community questions. But let's get it kicked off, guys. So we ready? All good?
Yes, let's do it.
Fantastic. All right. Terry, I'm going to go over to you to start off with. I'm not going to know how to pronounce this, so I'm just going to spell it out. FETI 70, FETI 70, Ferro, Titanium 70 is now live. But what's the response been like for you on the ground and in the market now that we're live?
No, it's been very good, considering it's a groundbreaking product, both in terms of investments and in tokenization. And it's also groundbreaking in the process that we use to make ferro titanium. So there's a lot of technology that's all coming together at once, which is very exciting. We have some traction. We're really accelerating on it. We're working on some friction issues with some very large investors, and we expect this to go very well. But I'm very happy with the progress, and well, we'll have other questions and more discussions, but it's a very exciting time, especially for tokenization and real world assets, especially mining assets, which are so in the news these days.
Yeah, it's really interesting because, like, Australia, where Redbelly's from, where I'm sitting here in Sydney, and you guys are all global. The mining is such an important kind of industry, and when you think about the types of things that tokenization can do for it, it's just mind-blowing because it's an inaccessible, typically kind of field, but like tokenization is really helping. Tim, I'm going to go over to you, so we'll reverse the order here. What kind of investor behavior or demand patterns have stood out since the launch? Is there anything that, I don't know, you might class as unexpected?
Well, the offering is a digital offering, so we're really focused on two different investor pools. We bifurcate by U.S. and non-U.S. because the workflows are a bit different. So I'll focus on non-U.S. right now because that's where we're having a little more fun. The offering itself is very, very low price entry point, $100. So we're really trying to look for somebody who wants short duration, high yield. That's not something that's been easy for somebody to actually find, particularly to expose that small level of capital to. And the reason why they're going to be attracted to something like that is because it has the attributes of an asset that plugs into the DeFi world. And that's one of the aspects that we're trying to achieve.
Yeah, fantastic. And I think that being able to plug in, it's definitely just, it talks to the access again. Like, first of all, we're tokenizing, you know, these things that normally people wouldn't even touch. Like, what would you normally do? You do equities, ETFs, maybe bonds and stuff that are available. It's really hard to kind of touch this stuff unless they're listed. And, you know, blockchain overall just provides a lot of that. Going over to, you know, more on the access, and let's get into some of the RWA mechanics. Brian, I'm going to go over to you. This is on like RWA mechanics and on-chain yield. And maybe, you know, Terry, Tim, you can add to this as well. But like Raze, you guys made daily yield, let's call it a core part of the offer. What was the thinking there? Because people want to understand that a little bit more. How does it actually work? Let's, you know, to borrow a phrase, under the hood.
Yeah. So, you know, we're very passionate at Raze of actually putting offerings together that are real. You know, it's ironic that we call this RWAs, and very few tokens that are floating out there have real backing by anything except for the faith of the market. And you know, it was kind of interesting because when we really doubled down on RWAs with building out this company, we kind of made it a mandate inside of our company that when we started servicing true RWA projects and issuers are wanting to do it, like Ferrox is doing, we had to have due diligence done to ensure that there really were assets that are backing this project, that they were actually using this token offering. Sorry if my camera went blurry. I'm not sure what's going on. But we were using this token offering to actually ensure that people can get real liquidity with the return, if you will. So think about it this way: if I'm an investor, if I'm a token holder, and I come in and my only option is to trade it on a DEX or an exchange or something like that, I've essentially just bought a public offering, right? But what about all the other opportunities to be able to invest and be able to privately invest and make yield? And you said it earlier. Quite frankly, there is virtually no opportunities out there for lower class investment amounts, such as $100 or $1,000, to be able to get this kind of yield. And so when we structured this deal with Ferrox, the goal was ensure that the token not only yielded, but that there was short-term liquidity for anybody that was holding that token. That was an absolute mandate for it, and that's what we've accomplished.
Yeah, it's brilliant. And yeah, go ahead, Tim. Please add.
So we see liquidity is really two different things, right? Liquidity could be yield off of something, and liquidity is access to, you know, your assets real quick. And in the private markets, those are two aspects that have never really existed. So for me, coming out of that space, it's really exciting to be able to deliver something that is a true private placement and has the attributes of short duration, high yield. So again, the reason why it's important to have the income being pushed out is for the operability. And if you imagine there's two tokens, they're going to yield exactly the same. One will pay you after 90 days. One will pay you every day. Still the same amount. I think we know which one's going to attract more attention.
Yeah, I think that's brilliant, and it's really interesting. You know, first of all, just pointing out that if anyone is watching, you might be listening to the stream, but Brian seemed like he entered witness protection there for a little bit because he was dropping some proper industry, powerful kind of insights, folks. So that's just the alpha gods putting the mask on you a little bit there, which was funny. But you're back now, which is good. But you know, what you mentioned there, except for the faith of the market, I think that's an important thing. Just before we get over to Terry's thoughts on this, but you know, there's a lot of hype out there, and some of them are not really backed by real things. And I think that's a really important thing to highlight, kind of like Google, dropping some shots fired at ChatGPT with their latest announcements. Check out the AI stuff later, folks. But Terry, over to you, just building further on this. You're a mining business, chairman and CEO there. What's the significance of, let's call it, it's a new financing channel, especially like the yield flowing back to daily holders? What's the significance of this for you?
Yeah, well, once again, it's a very unique product. And what this is an invoice token, effectively. So it's getting an incredible yield. I mean, we're issuing at 20%. So and it's a daily, so that, if you have an offtake, there's always problems. It's mining and product and trucking and whatever. So if you're expecting your repayment in 90 days and it's 95 days, you're still being paid for it. So you're still benefiting from it. In fact, you may want a longer delay, actually, in that particular case. But in the other hand, this is also what I would call a streaming deal too, because you can start selecting different parts of the accounting balance sheet, cash flows, and take a yield off of any one of those things. There's also royalty deals out there, and any of these unique things that are out there that only the big institutions seem to be able to apply. We can now bring this to the people and small business. So small business and retail can join hand in hand and benefit together.
And Mark, if you don't mind,
I
was going to say one other thing too. What was so fascinating when Terry brought this to us, or started talking about this many months ago, I learned a lot about his industry very quickly. And what was interesting is, he has the same friction and same challenges as a startup raising capital, as a big business raising larger funds to do some sort of capital outlay to expand. He's got the same all the same capital challenges, right, to do something, but he's trying to expand his business. And then you throw on top of that mining, right, and mining out, in a foreign country, et cetera. And I didn't realize how difficult it is to finance those kind of things. And you're out, people say 20%. Oh, that's kind of high cost of capital. Not really. When you look at what some of the larger institutions, and I won't name them, that essentially finance these kind of deals, they're not doing it at 4%, right, Terry?
No, not at all.
No, it is fascinating, guys. Because what you just described there, a lot of people don't realize. You said a very good point. Friction. That's what blockchain, that's what smart contracts, that's what programmability is all about. It's that friction that is there amongst so many industries. And Terry, I think it's really interesting that you alluded to, there's all these different, we can select different kind of payment flows. It's not just, hey, investors only make money because of the yield, or you only make money off the revenue that we share or something. There's multiple different areas that we can kind of dive into, and I'm sure this is just the start. This is just opening the door to tokenization, and there's more that comes from that. But going back to you Tim, let's talk about accessibility and broadening the investor base, which is a good segue from what we've just discussed here. Making the entry point, as Brian and yourself pointed out before, at just $100. I've got to say that was a really bold move. It opens up a lot. What does that unlock, do you think, in terms of the investor accessibility and let's call it reach?
Well, even in traditional investing in the high net worth space, and even ultra high net worth space, that first trade you get from those clients, if you're lucky to get one, is relatively small to what they actually will allocate to you. So if I look at that as a corollary, there's many people that would actually rather test something out at $100 because they can, even though they're, if in the US, an accredited investor, but we can't do it that low because of economic reasons. But because we can do it and the economics aren't challenging, this money has to be deployed. It's got to get a return and then be returned. So we were really excited that we could get it that low, and it's super simple to do because the tools we're using, the technology we're using allows for that. So it really becomes a choice of, are you willing to do this for people? But it's beautiful.
Brian, do you want to add further to that?
The promise of blockchain has been for many, many years accessibility, as you said earlier. And the ironic part is that this accessibility has created significant amounts of scams. It has created pump and dumps, have created highly speculative types of trades, and has really, unfortunately, created a situation where this retail investor that's coming in, literally their only option to make significant money is to throw money into a meme coin or a new utility token that's launching and hope and cross their fingers that they don't become the liquidity. And it's so backwards. And so if we're going to use this tech properly, let's ensure that we've got a real offering that's backed, because let's not forget that traditional finance and institutions are adopting this, have been adopting it for years. JP Morgan finally just announced that they've issued their first public security on chain, but they've been doing private securities with their own private chain for years. And so this is not a thing of a nice new toy for retail investors. This is infrastructure for finance. So how in the world can we, as smaller investors, retail investors, not high net worth, take advantage? Well, we have to be able to enter at a lower price point, and the trust has to be established. Ironically enough, and interesting enough, we have actually seen people with high net worth types of portfolios come in and look at deals like this and say, I'd love to participate. Can I just try it with $500 to $1,000? What they're really saying is, I need to trust this first before I participate. So I think the very nature of a low entry price point is important, not just for non-US or retail investing, but also for any kind of investor looking to get into digital.
I think it's, oh, go ahead, Tim.
I just want to add real quick. This is a global securities offering. This is no different than something you'd find out of a very tall building in a very big city. It is issued out of the British Virgin Islands under the BVI Financial Services Commission. If this is purchased by a U.S. investor, this falls under U.S. regulations. It's been offered under Reg D. We're doing some pretty interesting things using general solicitation. So this is being offered on a website that's perfectly compliant. It just hasn't been used a whole lot over time for other reasons. We're comfortable doing this. And so it's important to know that wherever you buy this in the world, assuming you're in a country that you can, this is fully compliant.
Yeah, it's interesting, the irony of working in blockchain and yet seeing so many things that are out there not using blockchain, whether it's promises to investors and they're not built into the smart contract, or it's the rug pulls, it's the scams, it's the Wild West that, is typically aligned with this. Websites like Web3 is going great, which is something, people should check out. Yes, it points out the flaws, the things that are going bad in the industry, but we want people to know that because we're trying to do the right thing here. With real backing, real world assets, etc., and doing it in this real world way, which is going to transform just like other technologies did. But back to you, Terry. Now, you've operated in big ticket finance throughout your career. How do you view this sort of micro investment model as a long-term capital solution?
Yeah, it's growing tremendously. I mean, and will further. I managed a lot of money for very high net worth family offices and pension funds and that. But what I'm seeing right now with the high net worth, to go back to a bit of what Brian was saying and Tim, was you now have a generational coming together where Bitcoin is just like, yeah, okay, missed the boat here on this one. I'm not missing this boat. But, it wasn't backed by anything. And for us being in big finance for many, many years, we don't want to talk how many decades, Tim, you and I, but now there's something tangible that we can, the very wealthy groups, the very big pensions can really grab hold of the horns and hold it. And in terms of, as I say, there's so many different ways you can spin these tokens too, and with the smart contracts, and it's just all built in, and it just simplifies things and cleans it up too. I mean, counterfeit, it's, there's going to be scams, you got to be careful, but it's just going to be so difficult to create those scams. and counterfeits and all the old things we've observed. But yeah, no, I've traded global derivatives all over the world in every corner of the earth, actually, and it was very exciting and all that. But that kind of all, expired. So it's nice to see this. This is like a whole new spring here with tokenization.
You get a chance to participate now. Like, I know what you mean. Like, there was the .com kind of stuff I was just getting out of university, so I was too young to participate in that that uplift. And definitely on the Bitcoin thing, I was working in traditional finance at an investment bank and totally missed the boat there, not seeing what this would become. But I think that people do have that opportunity now. That's a key message. By doing all of these things, bringing the technology together, it makes it safe. By having it at $100, it makes it accessible. By talking about it here, it's giving people that opportunity. This is a question for all, and we can go around the room on this, but let's talk about like the roadmap and composability here, which is really important. You guys have hinted at things like stable coins, asset bundles, using the Fedi 70. Actually, can I just ask, how do you guys pronounce it? How do you prefer, just for the audience? Because someone might see this for the first time. They want to say it the right way. How do you call it?
Terry or Tim?
I'll answer that one. It's actually just the shorthand for ferrotitanium 70%, which is the quality of that particular metal that is being smelted that the token is associated with. So the theory would be that you'll see many other metals and that those symbols would tie into the actual underlying metal being produced. But that's sort of the origin. Terry?
Yeah. So it's theoretically an alloy as instead of a pure metal. But yeah, so the 70 means it's 70% titanium and 30% iron. Very high purity.
You're going to produce a whole lot of commodity traders that don't even know it yet, which is great. I think there's going to be a whole lot more interest in the metals markets and maybe some complaints from people going, hey, ETF issuers, why can I only do this? Look at what these guys are doing. Cool crossovers there later on, but you guys have hinted at stable coins and the asset bundles and using ferrotitanium 70 as collateral. Can you walk us through the sort of thing that, that's next, and just letting people know we've still got alpha that will drop in a little bit?
Let me just jump on that. Sorry, real quick. Using a token for collateral is a lot that's based on titanium. Is a lot easier than using titanium for collateral.
Yeah.
Great point.
And we can produce 5 other ferrotitaniums, 30, 40, 50, 60, 35. There's a market for all of that, pure metal. We have a number of other products out of our same mine, pig iron and iron, magnetite. There's a number of things. And from this process, there's other projects we have too. But one could see it's not just, the product you're backing it with. It's what is it being used for? Like in this case, it's an invoice token, but as you say, maybe you create a stable coin, or if we're producing gold, instead of an ETF, we build up a stable coin that's supported by the gold deposits from that. There's just, the world is your oyster. There's unlimited possibilities.
Yeah, very good. And leading on from that, from a product standpoint, what will it take to make these tokens behave more like, let's call them capital market primitives? Is it liquidity, composability, multi-chain stuff? What's it going to take?
Tim, you want to take a crack and I'll finish up?
I'll take that and let you clean it up. Just putting this stuff to use and getting it out there. And then people understanding what it can do. Nobody's looking for what they don't know exists. Very few are. We're the people that do that. And when folks understand what they can find so easily and how they can interact with it, then that gets really, really interesting. I wasn't going to go to this. You made a comment about people being, investing in commodities. Most retail investors and two-legged investors in commodities have never been touching real commodities other than the gold and silver coins that they buy. They've been in futures, funds, ETFs, some derivative, connection to it. So this actually brings back that close connection. And I think as Terry was intimating to, Just because these are invoice tokens that you're basically buying at a discount, it's supporting, factoring, trade finance, the same kind of thing. You can also create tokens that would have a relationship to the price of the metal, to the spot price, to the future price, other things like that. We wanted to start reasonably simple because we were using 3 very non-trivial legs to our stool. Putting a global securities offering together in the first place is not that easy. Running a titanium mine in South Africa is not that easy. And putting it on blockchain to affect a better outcome for all 3 is also not that easy, but we did it.
Very well, very well. Brian?
Yeah, and I'll just add that it's the both the opportunity, but also the problems that come with opportunities. Is that because we kind of have this whiteboard, right? When we start with these kind of projects, and you can get you can get very novel in all this, and you can create a structured product that we in the tech world think is the coolest thing ever, right? And it's going to work, and everybody's going to love it. But at the end of the day, people are smart, even if they're just investing a few dollars upwards to a few $1 million, right? It's their money. They're going to be looking at it, very simply, but very specifically. Some will do deep due diligence, but trust is really the key here. And what was powerful about this, and what I want to see with other RWAs issued, is that I want people to understand the underlying business that's operating with this, and what their money is going to. And in Terry's case, literally a truck is pulling up and picking up this stuff, and then somebody is paying an invoice, and then capital is being returned to the folks that finance that. So that means you could be sitting in Singapore or LA, and you could be financing titanium being smelted, and a number of months later being paid back, and you'll never visit that operation, you'll never lay hands on it, and you'll never have to risk all the stuff that Ferrox has to do to actually do that transaction. You're just supporting it. So I think this is kind of what we've all been dreaming of in the industry, and these are the kind of products we should be seeing more of.
Yeah, absolutely. Can you imagine, like in the old world, if you didn't properly get out of like a trade, you could actually have delivered to your front door a bit of a commodity and stuff. Like we don't want that. We can do a very digital kind of world thing. Look it up, folks. There are really interesting things that you'll learn about when you get into commodities and derivatives and stuff. But guys, I want to circle back on this and back to you, Tim, just on the thoughts around let's talk about, this is like under the guise of lessons for other asset issuers, right? Like, do you have any advice for, what advice would you give for those that are considering like tokenized real assets? It might be others in commodities, it might be others doing something else, especially like, let's say sectors like, not just mining, but real estate, energy, other things like that. Any advice that you could give to them that might be tuning in here?
The best advice I would give, and what we've learned along the way with our journey and helping issuers like Ferrox and Terry, is make sure you have realistic objectives of why you're imparting tokenization, and don't let somebody let you fool yourself, or let them fool you that build it and they will come and everything's going to be great. Because a lot of times people can be fooled, particularly if your number one objective is capital formation. Unfortunately, there's ether around the thinking about raising capital. And I wouldn't say that this makes that easier. It actually arguably makes it a heck of a lot harder. If you were just going to do a go-to-market one and done, raise some money and run, you wouldn't do it this way. But if you want an enduring capital program, then these are kinds of things to do it. So remember what you're trying to achieve. Work with people that are truly going to help you, not help themselves first. This is a startup innovation business, so there's an awful lot of not completed things that people are selling you, and of course their dream is sometimes better than yours. And we're lucky that our role is not to be selling what we built. We sell you on how to help build you what you're trying to do using blockchain. So there's great stuff out there. It's the biggest challenge is you're drinking from a fire hose. Every time you do something, you're going to read the paper the next day and be like, there's something new. And you really got to be pinned down building something. Once you get into the digital world, the flexibility is really, I mean, there's a lot of flexibility until you build it, and then it's not that flexible. So that is the design and making sure that what you started with as a vision, the objectives can actually be achievable and, more importantly, deliverable so you can execute on them.
Very good. Very well said. Drinking from a fire hose is how we all probably feel. The great thing is, folks, that you can watch this as a replay, maybe even get the AI over it and get some insights from that. But Brian, do you want to add to that?
The only thing I'll say is, from a lessons perspective, is that we believe is don't allow the technology to dictate the requirements. Define what the business objective is first, and then go out and find the best tech and the best solutions to fulfill the problem. And it's so important, especially in our industry, because technology has been rapidly advancing, and there are so many protocols and so many different things that have rolled out. And honestly, people that are doing this for the first time, like Ferrox, it's a complicated environment, no different than back in the day in the .com phase and any other kind of phase we experience, where you don't know, and you just kind of have to dive in and figure it out.
Yeah, absolutely. And the good thing is that we're working in a community that is far closer to open source, where we're building
Absolutely.
with literal building blocks on top of other things. We're not like figuring this out from scratch. And people wonder, oh, why the technology? And we say these things like composability, the immutability, and we have commercial confidentiality with zero knowledge proofs. There's all these things you can say, but it's also a culture, right? Like, we are building in an open source kind of manner, where we are literally creating building blocks. And there's analogies, there's metaphors there. But Terry, I'll come back to you, just from the traditional space that you've been in. What have you learned going from traditional finance to, let's call it, on-chain issuance? Would you do anything differently?
Well, certainly I would not change my partners, Redbelly and the Raze group pair. Absolutely fantastic. Recommend yourselves to anybody and everybody, just as long as my future issuance comes first in your lives. There's been some friction, obviously, learning this, even though, I did do computers back in the 80s and traditional financing and derivatives, and even thinking outside the box. It is still a little difficult, and it's interesting to see people, I guess I can say my age, who are very excited about this, and they're trying to set up their own accounts, and it's very laughable. It's very enjoyable to laugh at them. But they're getting there because they're very excited about this. And so now this cultural, you are right. This is a culture, but this culture is now bringing in so many more people. Not just, it's the world as we can see, but it's generational too. And I'm very excited for what that's going to bring. And as I say, with the family offices, you have fathers and sons and mothers and daughters coming together saying, actually, this I can get behind.
Oh yeah, absolutely. This we can get behind, because this is like something, when you think about what is going on at a kind of global political demographic kind of sense, there is this shift of the wealth transfer that is happening. And what was the type of things you invested in back then? Well, it's more towards this digital future that a lot of folks know about. And I have to not disagree, but I have to add further to what you said there, that the older generation, it's fun to see them like trying to onboard themselves. The younger generation too, there's so many people that are not digitally literate. And even if you are digitally literate, even for folks like us in this room, it's still hard for some of these places where onboarding, getting wallets, getting all that kind of stuff. But it is getting better. There's groups out there that are making it easier, more like a Google sign-on, etc. So interesting stuff there. And just
and Mark, one more thing too. The reason why, a lesson learned as well, is that it's not because we're all technically illiterate. It's because the old system, the fiat system, the banking system, is trying to, well, they're not trying to, but the digital world, the blockchain world, is trying to merge with the old fiat system. And you're talking about two forces running into each other, and it doesn't play well with each other. It's getting better, like you said, and I think we're going to see a huge improvement in the next 24 months. but that is a big issue still.
Yeah, I agree. And people, I think, are coming to realize and coming to just respect that it's not just swapping out one system with a new one. Like if you've worked in consulting, if you worked in change, if you're doing any kind of job that you're in and there is a change, you could be working at a cafe and all of a sudden it's a new register that gets put in or a new menu. Like there is always these frictions that we have in everyday life. And what we're saying with all of the stuff that you guys are interested in and building, we don't have to have all those frictions. We've got technology now. Now, this is a question zooming out, and we'll get to the alpha. I know many people have been waiting for here. That will come just after this, and we'll get to some community questions. But just zooming out, the RWA outlook. What's your outlook for real-world asset tokenization? Crystal balling, not holding you to it, not financial advice, but how do you see it playing out in the next 12 to 18 months? Where do you see serious traction forming?
I'll start and I'll be real brief. I think that all the attention is going to still be on the public equities market and institutional adoption for the next 12 to 24 months. I think that's going to get a lot of the news feed still because there's a lot that still has to transition to this. I think quietly, though, you're going to see a lot of adoption through projects like this. And people are going to be quietly working on this like JP Morgan did 5 to 7 years ago. And the private space is actually going to roll this out at a rapid pace. And it's going to be one of those, the old saying, it's going to be very slow until all of a sudden it's a tidal wave. And I think we're going to wake up and realize that there are entire industries that are now building and purpose built on on-chain financing. And I think that's really where we're going to see. I hate to predict timelines, but I think you could just go look at all the stats and, if Ferrox begins to transition even just 20 to 30% of their capital efforts in the next 24 months instead of traditional, that's going to be a big signal. And what do you think he's going to tell everybody in the commodity space that's having a difficult time raising money? You should try this out. This worked for us.
Yeah. Tim, anything to add to that?
I thought you were going to go to Terry.
So we can go to Terry first and then come back to you if you like.
I was just going to say the democratization of both the investment community out there, at least in the mining sector, and to global investors from retail on up. There's no gatekeepers. If you have a mobile phone and a Wi-Fi, you can invest. And if someone's making that offer in the middle of Congo or Chile or some island in the South Pacific, they can make these offerings and people can invest. And they don't have to invest a lot. They can have a huge diversified portfolio, but their fund managers and their traditional banks aren't going to provide those opportunities to them because they only offer their products to them. So now you're offered the entire world and created. I mean, again, Brian just said it. Like, there's going to be industries and groups are going to create massive, like ETFs, but indexes of all these different products. It's quite exciting.
Go ahead.
Thank you. That was a shameless way to sort of get a word after him. So RWA is what's been missing. Fake world assets have been out there for quite some time. That's what crypto truly is. But listen,
FWAs.
Find another buyer. There's value. Everyone believes in it. There's value. This is what a currency, construct is. So I'm not really poo-pooing that. But beyond the one or that everyone trusts, or the handful that function and generate revenue and really are supported well. It's all FWAs. And so that's been missing to anyone that has a fundamental sense of, how do you value an asset? Let's use a discounted dividend model. It's like, okay. I'm not saying you need to stay in the old world, but to get to the new world, you have to have some semblance of familiarity of the asset. And so I think real world assets, real yield, for many respects, you're really just buying it in a different format. Maybe you're buying it for the first time because the old format was inaccessible, too expensive. But it's just the access and then the experience. The experience is unbelievable. And then once you've breached out of the fiat world and you have enough assets in the digital world, you're not taking those assets back. You're going to be using stable coins as the way to move around. That whole infrastructure didn't exist 2 years ago like it does today, like it will tomorrow. And so the timing for RWAs, we've been waiting. We were a little bit ahead of time, but we were so happy to see nearly a year ago that the world was starting to consistently come back and say, no, this is for real assets. And so the other fund's still going to go on. That's not going to stop. I guess, to sort of close that thought, 5 years ago, there was one lane in this and everyone was after it. And it was basically you could trade crypto on a spot exchange. Okay, so you make markets, trade vol, do things like that. But there wasn't much you could do. Today, you go to the big conferences and there is a lane for everybody. You can get really nichey, and that's something. And so I think that broad participation, the fact that everyone doesn't have to try to do the exact same thing as everyone else, and they can find success, gets me really excited for what's really going to happen when people start doing this.
Yeah, we're bringing like all these horses to the water, and now they're actually starting to drink. We don't have to force them as much, and I think this is like a great example of what we're going to be able to do here now. The alpha in the room. It's to do with rewards. I'll get you guys to explain it, but I think I literally only just heard about it before the call. Thank you, Tim Bass over at Redbelly. People in the community were asking if I knew what it was. I'm like, I don't know yet, so I've literally just discovered this as well, but I'm excited to hear from you guys about it because it is a unique thing and a new way to provide rewards for those that are doing things that actually provide value, I think, to the network. Who wants to take the mantle on this one? Maybe Brian, let's come back to you. If you want to, the stage is yours. Let's make the announcement.
Yeah, so thank you. So the announcement is that, and actually, I don't know if we can do this, but while I'm talking, I can flip over to the site of where it is just for folks to get a visual here. But the announcement is that when anyone participates in this offering, in the Ferrox token offering, by simply going to this website, I love the fact that it's so accessible right here from their site. And you can, this is the alpha, is that Redbelly has come up with a program to where essentially, regardless of what level you're coming in at, they're going to not only reward you with Redbelly tokens based on the allocation of tokens that you have. So literally, if you own one token for $100, you're going to be able to participate in this. It is going to come in the form of RBNT tokens, and it's essentially going to increase your yield on what you're already getting. But it's going to come in the form of the native RBNT token, which I think is pretty cool. But they are also going to reward the top allocators. And I believe they've decided, and hopefully I don't mess this up, but I believe they decided that they're going to do the top 10 token holders. And so they're going to do a generous reward allocation. The announcement is coming soon. Redbelly will be in charge of that, and they're going to distribute it to the wallet holders. And even if you purchased a couple of weeks ago, it still qualifies. It's at any point. And a little point on that is that what I love about this is that this would be so incredibly difficult to do in traditional finance. Actually, it would be impossible for a number of reasons. And I love that it's such a simple thing in the crypto community because it's been going on for a long time. We're talking about a real world securities offering around the world that anybody outside, even the US can access. And now they're also getting rewarded with valuable tokens that they already believe in the first place, which are the Redbelly tokens. The second thing that I love about this is it's really going to gamify things, and it's really going to reward folks of whoever the top holders are. They're going to get a much bigger allocation. And so this is what we're doing phase one. And keep in mind that this is just one tranche. This is a pilot launch with Ferrox. So I'm excited to see what comes next on this. And so real quick, I don't know, Mark, do you want me to go through and show everybody kind of how the offering works?
Go right ahead.
So So as you can see here, you can review the offering. There's a tremendous amount of due diligence here, which is what I love. It's very different than most offerings that are out there. So it looks very traditional as a token purchase. Once you enter in essentially the Raze portal here for Ferox, you are going to be presented with the option of, you have to choose whether you're US or a non-US investor. As everyone knows, if you're a United States investor, you have to pass not only KYC, but you have to do a verification of accreditation. And there's a $4,000 minimum for those folks. Same yield though. Now here's what's really cool, is that non-US investors, non-token purchasers, okay? Let me share the screen. Sorry, I was sharing the wrong screen. Non-US investors, okay, are getting the exact same yield as US investors investing 4,000. So we've leveled the playing field, or Ferox has leveled the playing field here. Same redemption period, which simply means that there's a minimum 90-day hold on this token, but literally you're going to get an ARR yield within 90 days of holding this. And I believe Terry's going to be working on some perpetual offerings as well, where you can hold for longer redemption periods. So this is a tremendous offering. Once you continue on here as a non-US investor, you're going to be presented all the details here on the screen. You also are going to be able to see what your daily rate of return is, your daily interest, what your token is worth within 90 days, and the profit per token. And then you invest, select how many you want after you've connected your wallet. Now, is the great part and the frictionless part for Redbelly wallets is that because you're already KYC'd, you don't have to go through a whole other process of KYCing. You're there. So literally, once you connect your wallet, as long as you have enough Redbelly to pay for gas, which is obviously minuscule, and you have USDT in your wallet, you can purchase a token. It takes just a second, a couple confirmations in your wallet. Most EVM wallets are supported, including wallets on Wallet Connect. So whatever can interact with the Redbelly network, this system can fully support. So at that point, you sit back and you earn your daily yield. And then after 90 days, sometime after 90 days, you're going to get your full redemption. Smart contract's going to drop the principal and the interest back into your wallet, and it's all done and finished. And that will be the end of our pilot. And after our pilot, there's going to be a larger tranche, and there's going to be a whole other offering with similar yield and hopefully even bigger rewards. So this is a quick view of what this looks like.
I can go to either Terry or Tim to add further on this. Who wants to shoot first?
I'll go real quick. As far as user interfaces for investors getting invested, particularly in the private placement world, this is unheard of. Even in just traditional retail, this still is unheard of. The relatively frictionless pathway to get diligence, contracted, invested, and hold your asset. That's one of the points of leveraging blockchain for securities origination. So beautiful. Terry.
Yeah. Well, unique opportunity. And as Brian says, we're already drafting up a number of other potential tokens, not transactions, I guess, as well. But the good thing here is we are producing some very good traction. We're lining up to sell out of this particular token in the next coming weeks as well. As soon as we can get some people to set up some wallets, which is a bit of friction there, but we're getting through that. And we look forward to coming up with some other very unique products too. We've got a big whiteboard of multiple inventions, if you will.
Yeah, it's very Edison-like, and I think it's right to feel this exact way, because we are literally bringing. Not only was there the power of what it is that's being created with tokenization, doing stuff on the blockchain, it's this collaborative approach, where Redbelly needs Raze, needs what you're doing there at Ferrox. It's all of this coming together and building out examples, because there's going to be multiple others where paving the way there. And I think this is a massive alpha drop that people are already talking about, as I can see in the community channels. I want to go back and kind of round out with some community. There was a big community question that was all about let's talk about the amount tokenized. So there's already let's say, and anyone can answer this, there's already close to $1 billion tokenized on Redbelly. It's over 70 billion more in the pipeline. What do you guys think makes tokenization, the process, take time? What do you think are the key steps, challenges in getting assets live? We've alluded to some of these before, but I think important to just like hone in on this specific community type question, because people want to understand that more. I think it's exciting what's happening here, but I think getting and just hammering home that this is a process, folks, but we're doing it in the right ways versus others out there. Who wants to have a go at explaining the challenges a bit? Brian?
I'll just say this, that you have to, whatever the goal is on the offering, you have to remember that, you are essentially raising capital in this particular scenario, right? Or you're providing some sort of liquidity if you have a different setup to your already investors that you have. And at that point, right, everything that is like traditional needs to apply. You need to have legal, you need to review what your disclosures are to investors, right? But I would say the most important thing is you have to, before you do anything else, you have to identify who your investor avatar is, who your profile is. So many projects have gotten that wrong, or they've tried something and it didn't work, and then they didn't come back out to the market with anything else because they said it failed. And we have to remember this is new stuff. And so you have to realize that what you think investors want, just go back and think about what the traditional looks like, right? Would you invest into this if you're putting it to market, right? And just because it's on chain doesn't make it. We always have a joke internally that says, if you have a bad offer and you put it on blockchain, you've just made it 100 times worse. and so don't put a bad offer on blockchain, or don't tokenize a bad offering, I should say. Tim, I'll let you finish.
I'll just sort of point out, and somebody can correct me if I'm potentially wrong, but blockchain was not specifically invented for private securities. It's being leveraged to help private securities operate and do things better than they could before. And so the business case is what you're trying to support. And Brian mentioned this earlier. Just going and tokenizing something without making sure it will support that business case is that it sounds so not that important. That's the most important part. That is the breach between the two worlds. And you can't just, old school, you can use a pencil with an eraser when you're, structuring a security, right? I mean, once you've issued it, well, you can still make some changes. You have some flexibility. It's not great, but you really have to, you don't have as much flexibility here once you program things. And so that connection, and then, and a shout out to everybody behind this from all corners at Redbelly, at Raze, at Ferrox, and everywhere else. This took massive communities of diverse people with extreme deep domain knowledge to bring this all together, which is super exciting. It was a global project. If we actually did a map of who touched this to get it across the line and in a real short order of time, I think people will be absolutely amazed at how the globe has been leveraged this way. And so I think, keep that in mind, that don't lose sight of your objective, and don't think that this is just the, magic pixie dust to, and it's easy. And then you'll have a fighting chance.
Absolutely. Terry, over to you.
Yeah, well, as I was saying even before, I mean, the best part of getting this over the line was the Raze team and yourselves at Redbelly. I can't say enough. And I think the biggest hurdles for them was me. So I apologize for that, guys. And but the big concern I had was the legal. And Tim and Brian did a fantastic job of that. There's a lot of meetings, a lot of calls on that, and I feel incredibly confident where we've come out there, because that's the stuff that bites you in the butt later on, and that we do not want.
Yeah, it's a very good point there, because what you alluded to is you've got to have the right people in the room, the people that know this stuff, the people that are wanting to do it in the right way. And Tim, what you said there, it harkens back to episode 1, where it was Arturo, my colleague, who's been buzzing in and out in the background there. You guys might know him as, you guys see them in the chat, but were it not centralized, we do some things in the space with Redbelly there. The interesting thing is that it's why are you doing this? Like, what is the reason you are actually if it's capital formation, as you said, cool, but like that's such a short-term thing, and it's not going to last if the only reason you're doing it is just that, and there's not actually something underlying around efficiency, around actually using this technology. You're built to fail in many ways, or you're just waiting on the next bag holder to take those assets off you because they believe it's of value, as we've alluded to like earlier. There's plenty of lessons that we've got here, but we do have to round out. There's links in the show notes. There's going to be all that kind of stuff. But do you guys have final, some final things you want to tell the community just to round things out? Brian, I'll go back to you.
I'll just say I'm really appreciative of the amazing Redbelly community, because when we dropped this non-US offering and the announcement was made that you guys had this available for any of your wallet holders, it was just amazing to see the response and the interest in this such early days. And big hats off to Redbelly and the team. And I'll say this a little quick story. When we were going to bring this to market, we came at this as a very agnostic kind of thought of like, set chains aside, set protocols aside. How do we purpose build this so Terry can be successful? Then we'll bring the protocols in, then we'll bring in the technology and figure out like how to make it work. And our guys, this is our first offering on Redbelly, and our guys built essentially on top of Redbelly network in literally, I think 3 weeks. I think 3 weeks we went into testing, and they had never operated. I mean, of course it's EVM, so that helps. But I can't say enough things. The documentation was solid. The support was fantastic. So I just want to give you guys a lot of credit there. And then also, I think acknowledge Terry here, because you're talking about a forward-thinking CEO that's obviously blazing a trail here in his industry and willing to go through all the crap of technology innovation to get to this end goal. Because if it was just about raising $500,000 to $1 million, he would not be doing this. He can get that from other sources. He's gotten that many times over from other sources. He sees the vision of this type of way of getting capital is far superior long term, and he doesn't want to miss that boat, and he's willing to do the hard work now and invest the money and time to make that happen. So huge kudos to Terry and the Ferrox team.
Fantastic. Tim.
Yeah, I'll just quickly add, capital formation, everyone needs it, so it's a worthy pursuit. But doing it this way, and in order to do it this way, you're really connecting the traditional type of investment, whether it's on chain or not, but being able to plug it into the DeFi world, being able for that to operate and to do what you can do, where now you can use that asset or that tokenized asset for collateral. You can use it to do all sorts of things that this whole world is yet to really exploit, because we haven't gotten the players there. And once you start getting the participants into that vis-a-vis creating tokens, and I think you'll see us be developing quite a bit in the private credit space, because that fits us really nicely, and really trying to exploit what DeFi can do and keeping it comfortable for people in the traditional world.
Fantastic. Thank you. And finally, over to Terry.
The collaboration's been great. Once again, just as Brian was saying, how quickly when they pivoted and said, we're going Redbelly and we're going to have this up and running in 3 to 4 weeks, I was like, really? That was quite amazing. It was done. And all I got to say is I'm bringing you guys to South Africa to coach some of my mine engineers and metallurgists so they can get off their butts and get some stuff done quickly.
Yeah.
Good to see you,
Fantastic. Look, we're going to round out there, and folks, look out online for the blog, the recaps. Watch wherever you are looking at on LinkedIn, YouTube, etc. There's a whole heap of stuff on this show, because there might be people that are literally just tuning in now. But there's some really amazing stuff. The alpha that was dropped, the insights that you've just shared. I think there's lessons in here to unpack for so many people. We're going to have a field day today just in the community. I think a record number of viewers online from what I can see on X. But look, I thank you all for that. this was a lesson in how we as a group have come together. But it's all about collaboration. The community is just as important. So they're all part of this too. And guys, if you're watching online, we are just getting started. So Brian, Tim, Terry, thank you so much for your time.
Thank you,
Mark.
Mike.
Thank you.